This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning coming out of a holiday midweek one. Welcome change. We're coming to you, as always, from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, with me, my colleagues Sonia and Nigel. Guys, hi, morning.
Hi, good morning. And when's the next midweek holiday? Any idea?
He
keeps track of.
I'm not. It's September 19th is one, but I don't know whether we're getting one
that's
before
a Ganpati holiday,
That's a
right?
Ganpati holiday as well.
Okay, but there's smiles, right, on everyone's faces as you have that midweek break. But I don't think there's going to be any smiles on the bulls' faces this morning, considering the cues that we have today.
Yeah, that's right. You know, before we go on, just want to wish all our viewers, our Parsi viewers, a very happy Parsi New Year as well. So those who got a holiday, enjoy it. And, you know, the kids are really happy. The roads are clear today.
Absolutely.
So,
no school buses.
All right, well, let's just quickly tell you what you need to know, because it's not just one day, the overnight session, but 2 days worth of price action that the market will react to. By the way, you know, if you want to look at the last session here, it was a decent session. That's the Nifty and the market here. We saw a very good bounce on Monday. But the global action is still looking tricky. It was looking tricky Monday morning when we started a fresh week. And over the last 2 days, which is, two US sessions, not very much has changed. So let me just tell you what the 2-day change is. There you go on your screen. The S&P is down about 0.6%. Over the last 2 days, the NASDAQ is absolutely flat. The positive thing is that oil prices are down about 2% or so in the last 2 sessions as well. Now, lots of data over the last, the Asian session, the Chinese data. I'll get to all of that in just a bit. But the one thing which I think is important is that the U.S. retail sales data was indisputably strong. And I think that is something which kind of stands out, because the health of the U.S. consumer and how how the consumer in the U.S. is spending has got implications for inflation there, and what the Fed does, etc., etc. So that still is running very, very strong. As a result of that, U.S. yields have not given away. I mean, so you looked at equities, which are off a little bit, oil, which is off, but not yields. The 10-year yield in the U.S., the Treasury yield, is still at a cycle high of 4.21%. The dollar is still holding pretty strong at 103.23. So, we moved up from 102.5 a week ago to 103.23 or so. So this is the problem point, not just for markets here, but emerging markets as well. You want U.S. yields and dollar down, not up. In sharp contrast to what we're seeing in the U.S., look at China. So U.S. growth is resilient, but Chinese growth is disappointing. We got so much Chinese economic data for the month of July and January to July as well, and all of it, mostly all of it, severely disappointing estimates, consensus expectations. And as a result of that, we had the Chinese Central Bank, the PBOC, which cut rates. A rate cut was expected, but not yesterday. So it was in that sense unexpected. And perhaps there is more coming. But markets have taken the rate cut, the unexpected rate cut, as a sign that the Chinese authorities are waking up to the issue of very weak underlying growth in that market. By the way, it's got implications for metal stocks, etc. here, because on Monday, metal stocks, steel stocks, etc. all sold off. More on that later. The dollar is also, because U.S. is standing out, U.S. exceptionalism, right? The U.S. growth is standing out. It's rising against most currencies. Against the Chinese currency, it's up to about 7.3. It's also rising against other Asian currencies as well. And same is true for the rupee. In offshore markets, the rupee yesterday hit 83.5 at the day's high. So, and to add to that, of course, is the issue of inflation here in India, which, as we got to know, has hit 7.4%. It was 5% in the month of June, and this is far higher than expectations. Of course, it's been caused by a big surge in tomato prices, and the RBI in August had said that we'll kind of try and look through some of these vegetable price inflation-led overall inflation numbers. So maybe, that's going to be the case. But nevertheless, this does put downward pressure on the currency as well. So I think the rupee perhaps also in focus this morning. Just to circle back to levels here, the Nifty, as I said, saw a decent bounce on Monday. It's held on to the 40-day exponential moving average, which is 19,356. We got to close about 19,400. So that's the first level. which you kind of need to watch out for as we start another trading session. On the downside, 19,356. I mean, it'll be good if that's defended. On the way up, there is a falling trend line, which comes in at 19,570. And that's the one which needs to be crossed on a closing basis for more up move to come through, for confirmation that perhaps this correction is kind of behind us. On the Bank Nifty, we tested the 78.6% retracement of the previous rise and the 20 weekly moving average as well. So again, the lows basically from last Monday will be important. On the way up, 44,213 and then 44,470. 44,500, I think, are the two levels which the Nifty Bank needs to cross for some confidence to come through. Monday's rise notwithstanding, I'll again go back to the first thing I said, which is the fact that global price action is getting a little complicated. So, it'll perhaps be choppy, not one way. That one way kind of rise we saw and gotten so used to, perhaps, at least for the very short term, is behind us. So, you got to be more skillful, more nimble if you're trading out there. The implied open is about 80 points lower this morning. Sonia.
Oh, absolutely right. I mean, it's not looking good at all for the bulls. So this morning, the start is going to be extremely weak. And it's led by the financials. So that's the weakest link, both globally as well as locally. We all know that the Dow was down quite a bit, almost 400 points overnight. And it's financials that were under pressure after Fitch came out with that downgrade on banks. They said that they have warned that they may be forced to downgrade a lot of these banks, whether it's JP Morgan, Wells Fargo, etc. So all of these stocks were under pressure overnight. But not just that, there was this weak economic data from China as well that has spooked the markets. Now, for our own markets, we've seen 2 days of large FII selling. So overnight on Monday, there was FII selling to the tune of almost 2,400 crores. Put together, it's 5,000 crores of selling in 2 days. A couple of things to watch out for. Of course, inflation, that data point has come as a shocker. It's a 15-month high, the July CPI data. We'll talk more about that in greater detail. But all of that cumulatively may put pressure on the market. So a couple of levels to watch. The Monday low and the 50 DMA stands at 19,258. So that is a clear support for the market at this point in time. Let's see if that holds or not. But that's an important line in the sand to watch on the downside. And the market has actually lost quite a bit of ground. I mean, from the recent high, which was the July 20th high, the market is down almost about 3% odd. So let's see how things go from here. But clearly, the bears have the upper hand this morning. So looks like that could be the case through the course of the week.
Well, that's right, Sonia. The global and domestic cues both in favor of the bears. Any which way you look at it, if you look at the inflation print, if you look at the US data, that is very strong, which isn't very great news from a Fed perspective in terms of Fed action. And the Chinese data as well hasn't been looking too good. So the cues are in favor of the bears. Now, the Nifty has moved into sell and rise mode till the 20 DMA is conquered. So we are in that bit of a range. The bulls, though, they'll be scouting for some positive trigger because the FIs now, they move net short. I'll get to that in just a bit, but the short positioning, absolute positioning, has moved to the highest levels we've seen in multiple months. What did they do in Monday's trading session? Well, they added some short positions, close to around 6,000 contracts. And the 6,000 contracts pretty much were split down the middle. Close to 3,000 contracts odd were added on the Nifty as well as on the Nifty Bank odd. Now, the FI positioning has moved to the highest since April 2023. So in April 2023, the short positioning, net short positioning, was close to around 60,000 contracts. Now, at the start of this series, they had moved into a net long position. They were sitting on net longs, but now, in fact, that's turned around yet again. Remember, when we were net short in early August, actually, on that day, we opened up lower and we bounced close to around 150 to 200 points odd. Not saying that could happen today, but again, the short positioning has moved up. On the option side, 19,300 put, 19,450 call. Both of them saw a fair bit of open interest build up. So I'm taking the 19,450 call. The premium's around 70 rupees odd. So in the near term, the resistance level will be in that vicinity. 19,519 on the upside will be a bit of a resistance zone. The low that we saw on Monday, as well as the 50 DMA, that's at around the 19,250 odd. So that becomes a crucial support mark. Otherwise, if we break that mark decisively, we could easily slide another 300-400 points from there. The Nifty Bank, well, important levels to track. The 100 DMA, that becomes very, very important. And on Monday's trading session, well, we bounced from those lows of close to around 43,700 odd. So that becomes a crucial support zone. For starters, we start off in the red. the bulls will want to defend this 19,250. Maybe it's going to be that sort of a day where the bulls will just want to survive, take it as it comes, and then see whether or not we can break out of this 400-point odd range.
Okay, so let's see which way things go. Brent is now below $85 a barrel. Gold is at a multi-month low, so there's lots happening in the commodity markets as well. We'll talk about that in greater detail. But for now, looks like the start is going to be on the weaker side. We have two macro calls coming in for you this morning. One of them is from Sunil Tirumalai of UBS, who says that Q1 FY24 results saw less than 55% of stocks from the BSE 200 universe beating consensus estimates, and this is the lowest since the pandemic affected Q4 FY20 results, and a sharp drop from the 65% plus beats in the previous quarter. He adds energy, metals and autos witnessed more beat versus consensus, while chemicals and cement sectors had misses. Overall, the Nifty EPS is seeing downgrades led by Reliance, IT and commodity sectors and offset by upgrades in financials and autos. UBS is cautious due to extraordinary valuations versus ordinary outlook, and they prefer banks.
All right, on to some macro calls now. Samiran Chakrabarti of Citi says that they've revised average F524 headline inflation forecast to 5.7% year-on-year versus 5.3% earlier. Headline inflation could average 6.9% year-on-year in September this year and 5.9% in December before falling towards the 5.2 level in the first half of 2024. The base case is no further rate hikes, but Citi has pushed the first rate cut call to June of next year versus April earlier. Citi believes RBI would likely avoid a knee-jerk reaction in the October policy meeting, but there are factors that could make the RBI consider a rate hike in December.
Okay, there's one more view coming in for you to the inflation shocker. Upasana Chachra of Morgan Stanley says they now expect inflation to rise in the near term before moderating to below 6% from November. They also do not expect rate easing to start until Q2 of 2024. They believe liquidity management will likely remain the focus in RBI's inflation fight.
Well, the money market is closed today on account of Parsi New Year numbers. Well, we have a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, though, let's just run you through the list. We have ITC, Infosys, Mahindra & Mahindra and GMR. All of them should be reacting to positive news flow. On the flip side, you have Interglobe Aviation, Z Entertainment, Vodafone Idea, ONGC, Reliance Industries and VIP Industries. They'll be reacting to negative news flow in the last couple of days.